Thank you, Michelle. After a series of high-profile accounting scandals involving U.S.-listed Chinese companies, regulators are cracking down harder than ever. Karina Huber reports this move could make it difficult for Chinese firms trying to break into the U.S. stock market.
The U.S. Securities and Exchange Commission leveled the charges against the Chinese affiliates of the world's big four international accounting firms, including Ernst & Young, KPMG, and PricewaterhouseCoopers. The SEC says they violated U.S. securities laws by failing to provide documents for the agency's investigation of 9 Chinese companies listed on U.S. stock exchanges that are suspected of potential accounting fraud. In a statement, the SEC said, firms that conduct audits knowing they cannot comply with laws requiring access to these work papers face serious sanctions. Sanctions that could lead to a ban against Chinese affiliates of the big four accounting firms auditing Chinese companies going public in the U.S. This would make it very difficult for Chinese companies to raise capital in U.S. financial markets. The charges come after a series of high-profile accounting scandals at Sino-Forest and Longtop Financial.
I think the SEC has gotten hit time and time again, especially in the past few years, for not protecting investors enough. And I think that this was a strong, bold step by the SEC to show how crucial and important investor protection is.
Foreign auditors say their hands are tied. They say Chinese state secrecy laws forbid them from handing over those documents without prior approval. PricewaterhouseCoopers says the charges stem from conflicting laws between the U.S. and China and involves an issue that needs to be resolved between the U.S. and China. For years, U.S. and Chinese regulators have been wrangling over the issue, but so far there has been no resolution. China is the only major economy that has not signed an agreement with the U.S., allowing U.S. regulators to inspect the foreign auditors of U.S.-listed companies.
If you want to be a public company, you have to give transparency. You can't expect investors to invest in a company that doesn't tell you what it's doing and doesn't provide some assurance that it's earned the income that it says it's earned.
The accounting firms could face legal action from shareholders. Without admitting guilt, the Canadian affiliate of Ernst & Young earlier this week agreed to pay a fine of more than $100 million to settle allegations it had misled investors in its audit of Sino-Forest, which went bankrupt earlier this year amid allegations of fraud. Karina Huber, CCTV, New York.